Let's start with the important assumption. For the business background, business name is Sweet Corn Sendirian Berhad, began in early 2022. The location is at Mungkin Seri Menanti, Parit Jawa, Muar, Johor, for about 2.5 acres. The initial capital is around 50,000 ringgit, but need more additional capital to grow the business. We use Agrobank Young Agripreneur or PAM program to help us in terms of financing and capital to start the business. For the vision, business leader of sweet corn in the country and global market. For the mission is a leading sweet corn company with highly integrated operation and a strong focus on current technology and global standard. For the objective, first to pursue healthy farming techniques while looking for innovative approach to provide a wider range of nutritious food to market. Second, to increase the value of the sweet corn in the market. And lastly, to commercialize the sweet corn benefit. For the business strategy is first, strength, high gross margin, limited startup risk, ability to sell product online, skilled manpower, and strategic location. For the weaknesses, limited access to finance, high transportation costs, and unclear land tenure system. For the opportunities, new available method to increase sweet corn quality and productivity, continued expansion for online selling, and developing of wholesale distribution relationship. For the threat, competitor can offer the product quickly, change in climate, and pest and disease attack. Next, we move to the project information. Sweet corn is one of the cash crop that can adapt with varied climatic conditions. The location for the land is at Mungkin Seri Menanti, Parit Jawa, Muar, Johor. The length of land is 2.5 acres. We joined the PAM program to increase the capital when start up the sweet corn business. The sweet corn seed that being used is the best grade that can be found in agricultural shop. The land is already get an approval from meteorological and hydrogeological agency. Fertilizer that used are NPK, GML, and CIRP. For the assumption, we calculate the finance for 3 years. For the current interest rate is 10% for the 3 years. For the long interest rate is also 10% for 3 years. For the tax rate in year 1 is 27%, in year 2 is 23.26%, and in year 3 is 24.72%. For the inventory turnover is in year 1 is 3.75 times, in year 2 is 2.53 times, and in year 3 is 4.1 times.
Next, I will explain about the detailed budget in our sweet corn business. Detailed budget amount column shows the amount originally budgeted in sweet corn business. This is our detailed budget when we planning and regulating at our business to help create financial stability and to improve the efficiency of the sweet corn business operation, thus reduce the cost of production and increase its profit margin. The detailed budget that we use in our sweet corn business firstly is material. The total for material is RM 5,522 and then silver champagne RM 1,200 for 20 rows normally to control moisture content in bed and avoid from weed growth. We plant 606 units of corn to our land for about 2.5 acres. To keeping plants healthy and encourage new growth, our business uses CIRP fertilizer, Christmas Island rock phosphate for 2 bags, GML ground magnesium limestone, we use around 50 kg, NPK 15-15-15, and NPK 12-12-17 for 2 bags. The total price for fertilizer around RM 990. Other than that, to avoid our corn plant attack from pests and disease, we use pesticide and fungicide for 2 liter, also weedicide for 4 liter and foliar spray for 5 liter. The total price is RM 932. We do not use too much chemical spray in our plant because it can lead to serious soil pollution. Secondly, tools and equipment. We use lopper, water tank, power sprayer, knapsack, sprayer, watering can and big sickle. Since the amount of worker only 5 worker, we didn't use a lot of tools. The total price for tools and equipment is Rm 1,705. Next, the revenue cost. The production capacity is 1,000 unit for 2.5 acres. Each of sweet corn are sold only Rm7. The total amount received by the business we sold for 4 kg sweet corn is Rm28,000. For the wages, since we are new business, the amount workers in our sweet corn business are only 5 workers. The wages for 1 month for each worker is Rm 1,500. So for 1 year, the average for 5 workers to get wages around Rm 90,000. Lastly, for the development cost, the item we use is land preparation, electrical, and water installation and store equipment. The total cost for this is Rm 3,400. Overall, the total for our detailed budget sweet corn SDN BHD around Rm 100,627. We are still need more additional capital in order to grow the business further in this business. So, we make decision to use Agrobank Young Agropreneur PAM program to help us in terms of financing and capital.
Okay, now I will present my part, which is about the break-even analysis for the company. For this slide, first thing to know is about the important information regarding the business. Other than that, flow of the table must be known correctly as it will help us to understand the data clearly. In addition, the right steps and techniques to conduct the tables is also important as it is useful to analyze on how the progression of company while running the business in order to ensure that the company is able to produce profitability for long term. This table for the company is shown that it is done calculated for the 3 years period. It is good for the company to have proper planning, especially when they have come up to have long term of handling and management about the business. The identification and analysis of weaknesses will become easier and the problems will be solved immediately without wasting any times, energy and also some costs. Okay, next, I will proceed to explain about the details of break-even analysis for this company. You can refer to the slides for the further references. First, a break-even analysis is a financial calculation that used to determine a company's break-even point. Fixed costs are those that remains the same no matter how much product or service is sold. For this company, the only fixed cost used is wages that equal to 90,000 ringgit. Variable costs rise and fall according to changes in sales. In this company case, the table is shown that the variable cost is still arise for 3 years. The variable costs for this company are land preparation for 6,000 ringgit, electrical and water installation for 2,400 ringgit, and lastly is store equipments for 9,500 ringgit. The total for variable cost is 70,900 ringgit. The contribution margin is the difference between the product selling price and its total variable cost. The calculation for contribution margin is when the sweet corn is sold at 7 ringgit per kg and its variable cost is 1 ringgit and 75 cent per kg. Then to get the amount by minus them and we will get 5 ringgit and 25 cent per kg. The use of this margin is contribute to offsetting the fixed cost. The average variable cost is calculated as the total variable cost have to be divided by the numbers of units produced. The amount of total variable cost is 70,900 ringgit have to divide by 1,000 units. So the amount we will get is 70 ringgit and 90 cents. In general, lower fixed cost leads to lower break-even point, but only if variable costs are not higher than sales revenue. To decide the break-even quantity, we have to calculate by the numbers of fixed costs and divide it by contribution margin. So 90,000 ringgit divided by 5 ringgit and 25 cent per kg is equal to 70,124 kg.
Next, projected balance sheet. It shows the balance sheet sweet corn SDN BHD in year 1, year 2 and year 3. The reporting periods and year 3 and compare against a similar reporting period from the year prior. There are 3 formulas for balance sheet, which is asset, liabilities and owner equity. The information found in a balance sheet will most often be organized according to the following equation. Firstly, is asset equal to total liability plus total owner's equity. Secondly, liabilities equal total asset minus total owner's equity, and lastly, owner's equity equal total asset minus liabilities. A balance sheet should always balance. If a balance sheet doesn't balance, it's likely the document was prepared incorrectly. Typically, errors are due to incomplete or missing data, incorrectly entered transactions, error in currency exchange rates or inventory levels, miscalculations of equity or depreciation. Here's a closer look at what's typically included in each of those categories of value: asset, liabilities, and owner's equity. By looking at the balance sheet of sweet corn business, it can extract vital information about the health of our company being reported on. Firstly is asset. An asset is defined as anything that is owned by a company and hold inherent quantifiable value. It shows that in year 1, the company's sweet corn asset total RM 151,000 including RM 33,400 in current asset and RM 117,600 in non-current asset. In year 2, the company asset total RM 145,030 including RM 29,930 in current asset and RM 115,100 in non-current asset. In year 3, the company asset total RM 143,900 including RM 28,800 in current asset and RM 115,100 in non-current asset, same with year 2. Secondly is liability. A liability is the opposite of an asset. While an asset is something a company owns, a liability is something it owns. For liability, in year 1, the company liability total RM 42,450 including RM 27,450 in current liability and RM 15,000 in non-current liability, same in year 2 and year 3. In year 2, the company's liability total RM 37,500 including RM 22,500 in current liability, and in year 3, the company's liability total RM 37,850 including RM 22,850 in current liabilities. Lastly, owner equity. Owner equity, also known as shareholder equity, typically refer to anything that belongs to the owner of a business after any liabilities are accounted for. In year 1, the company's owner equity RM 185,050. In year 2, the company's owner equity RM 175,030, and in year 3, the company's owner equity RM 160,050. The company retained in year 2 RM 22,000 in earning during the reporting period, slightly more than year 1 and year 3. The information found in a business balance sheet is among some of the most important for a business leader, regulator or potential investor to understand. Without this knowledge, it can be challenging to know whether a business is struggling or thriving.
Okay, next I will conduct to present about the projected profit and loss for the company. As everyone know, the projected profit and loss is also referred to income statement of sweet corn Sendirian Berhad for year 1, year 2 and year 3. This slide is shown the income statement format that I have done created for the company. An income statement is one of the 3 important financial statements used for reporting a company's financial performance. Basically, the income statement is primarily focuses on the company's revenues and expenses during a particular period. The important information about the income statement, it provides valuable insights into a company's operation, the efficiency of its management, underperforming sectors, and its performance relative to industry peers. So, here's the explanation of income statements for the company. When you look at the previous slide, you will notice some amounts that been taken out or taken in for running the business. I will explain on how I calculate it so that everything is clear to understand. You can refer to the slide for further your own understanding. Firstly, revenue. In the year 1, the revenue is accumulated by 28,000 ringgit. In the year 2, the revenue is increasing at 42,000 ringgit. And at the year 3, the company's revenue is 50,000 ringgit. Secondly, cost of sales. In the year 1, the cost used for this company, especially for sales, is 7,500 ringgit. In the year 2, the cost of sales for this company is a rise at 10,000 ringgit. And in the year 3, the company's cost of sales is 12,500 ringgit. Thirdly, gross profit. To get the value of gross profit, we have to minus the amount of revenue and cost of sales. For year 1, the gross profits for the company is 20,500 ringgit. The company's gross profit for year 2 is accumulated at 32,000 ringgit. And the gross profit for year 3 is done calculated at 37,500 ringgit. Next, total operating expenses. We have to calculate the operating expenses for each of the 3 years. The expenses we calculated are wages, land preparation, electrical and water installation, and store equipment. The total operating expenses for year 1 is 4,900 ringgit. In the year 2, the amount is accumulated at 8,800 ringgit. For the year 3, total operating expenses is 13,200 ringgit. Other than that, operating profit, we have to minus the amount of gross profit and total operating expenses. For year 1, the operating profit for this company is 5,600 ringgit. For year 2, the company's operating profit is increasing at 23,300 ringgit. For year 3, operating profit is accumulated at 24,300 ringgit. And last but not least, net income. For this part, the calculation that have to be done by minus the value of interest expenses and taxes. The net income for year 1 is 8,100 ringgit. In the year 2, the net income of the company is increasing at 13,200 ringgit. And lastly, the company's net income for year 3 is accumulated at 13,300 ringgit.
Projected cash flow. First step, we must calculate net cash flow from operating activities. Net income must be minus with current asset and plus with current liability. In year 1, the current asset is 40,000, while the current liabilities is RM 27,450, and the net cash flow from operating activities is 31,450. In year 2, the current asset is minus RM 4,930, while the current liabilities is RM 22,500, and the net cash flow from operating activities is RM 70,570. In the year 3, the current asset is RM minus 3,300, while the current liabilities is RM 22,850, and the net cash flow from the operating activities is RM 90,550. Then, to calculate the net cash used in investing activities, we need to plus all the cash flow from the investing activities such as irrigation system cost, material cost, electricity bill, transportation and marketing, repair and maintenance, development cost, fuel and lubricant, wages, tax, and interest. In year 1, the net cash used in investing activities is RM 21,127. In year 2, the net cash used in investing activities is RM 21,722. In year 3, the net cash used in investing activities is RM 24,522. Next, we move to net cash provided in financial. To calculate it, we need to plus the long-term loan with the capital and retained earning. In year 1, the net cash provided in financial activities is 101,500. In year 2, the net cash provided in financial activities is 102,000. In year 3, the net cash provided in financial activities is 100,050. Lastly, we must total all the net cash we get. In year 1, we get 154,077, while in year 2, we get 141,292, and year 3 we get 144,122. In year 1, the beginning balance is 0 because the business is still new. In year 2, the beginning balance is 154,077. In year 3, the beginning balance is RM 141,292. For the ending cash balance, in year 1, the ending cash balance is RM 154,077. In year 2, the ending cash balance is RM 141,292. In year 3, the ending cash balance is RM 144,122.
Okay, for this part, we are going to discuss about the financial ratio analysis. So in this part, we are going to discuss about 4 aspects in this section. So for the first one, we are going to look for the liquidity. The second one, we are going to look for the efficiency. And the third one, we are going to look about solvency. And the fourth, we are going to look for the profitability. So in these 4 items, okay, we look for the liquidity ratio. So under liquidity ratio, we are going to look for the current ratio and for the quick ratio. So under the efficiency ratio, we are going to look for the inventory turnover and for the account receivable turnover. And for the solvency ratio, we are going to look for the debt to equity and debt to asset. And for the last one, under the profitability ratio, we're going to look for the gross profit margin, net profit margin, return on asset, and return on equity. So in all aspects that I said just now, we're going to look that relate to this company, either it gain profit or loss, or this company is suitable for the investor to invest in this company, and so on. So we're going to look for these 4 items, which is liquidity, efficiency, solvency, and profitability. So these 4 analysis, we are going to go through one by one to look how stability of this company, either it gain profit or loss. Okay, for the first one, we are going to look for the liquidity ratio. So we look for the current ratio first. Okay, based on the year 1 until year 3, the firms or our company has the ability to pay the debt in the short-term period because the value in year 1, in year 3, all above 1. So for example, we look for the year 1, which is 1.22. If we ratio with 1, means that our company or the firm have RM 1.22 for asset to pay for the RM 1 ringgit for the company debt. So which is, it was in the good condition if in case our company have to pay the debt in the short term period. So it was good because all the value all above 1. So that was a good situation. Okay, we look for the quick ratio, which means quick asset that our company have. So based on the year 1 until year 3, the company or the firm appear to have enough liquid asset to satisfy the current debt because the value still the same all above the 1. So for example, 1.02, if we ratio with 1, means that our company indicate RM 1.02 for every RM 1 ringgit debt of current debt this company have. So it also in the good condition for our company because all the value above 1 means that in the long term period, my company still have the ability to counter or to pay back for the debt that we loan. Okay, that's all for the liquidity asset, which is current ratio and the quick ratio. So we proceed, continue to the efficiency ratio. So for the first one, we look to the inventory turnover. So for the explanation, we look based on the year 1 until year 3, it shows how many times in a given period the firm is able to replace the inventory it has sold. So we can see for the two reasons. If it shows slow turnover implies, it means it have the weak sale or possibility it have excess inventory, or when it faster implies it was either strong or insufficient inventories. Mean if the company replace the inventory in a slow condition means that it have a something problem with the management to sell the product. So if in a faster condition, it means it have a good sale management or other reason like excess inventories or insufficient inventories. So we have to look for the other side. If a slow condition inventory implies mean it have a weak sale. If a faster implies inventory mean it has a good sale management. So we proceed to the account receivable turnover. So in this account receivable turnover, based on the year 1 until year 3, it shows how many times the firm convert its receivable into cash each year. So if the higher ratio implies means the company have a good efficiency in collecting receivable from the debtors. So it was in a just as a good condition for the company. If the ratio is higher, it means the company have a good management in collecting and convert it receivable into the cash. Okay, we proceed to the solvency ratio explanation. So we're going to look for the debt to equity. So if we look on the table, so based on the year 1 until year 3, it shows how much debt from the firm is owned. Mean how much the debt that the company own. So plus it also can use to access the amount of risk currently embedded in the firm capital structure. And in addition, investor always check this part to make decision whether the firm debt load is good or a bad condition. Is our company debt is not in a good condition, it will make the investor change their mind to invest in our company. If in a good condition, the investor will invest in our company. So that's the important for the debt to equity. It will attract the investor to make the decision to invest in our company. So we proceed to the debt to asset. So based on the year 1 until year 3, it shows the degree of the firm relies on debt to finance its operation and is an indication of the firm financial stability. Means that if our company have a higher ratio, indicate a higher risk. mean that our debt is rely on our asset. If our company have a higher ratio, means that our company in a higher risk. So that's very important. If we have a low debt to asset, mean we doesn't have to rely on our asset to convert it to counter to pay for the debt that's our company own. So that's very important if we have the lower for the debt to equity and debt to asset. Okay, we proceed to the profitability analysis. So in this part, we consist 4 items that we will discuss. So first, we have a gross profit margin, net profit margin, return to asset, and return on equity. So we look one by one. For the first one, we look for the gross profit margin. So based on the year 1 until year 3, it show how successfully the firm generate more profit. So means the higher the percentage, more efficient the firm generate more profit. So that was such a good condition because this company earn more percentage from year 1 to year 3. So we proceed to the net profit margin. So based on the year 1 until year 3, it show how much of each dollar collected by the firms as the revenue. So for example, 28.93% sale means that the return for our company is RM0.29 as the profit. So in this situation, if we have the better and the higher percentage, mean that we get more profit for our company in return. So that was good if we get the more percentage. So we proceed to the return on asset. So it show how profitable of the firms, means that it also helps the investor to understand how efficiency the firm is generating revenue on its asset. So the higher number is the better, because for the firm is leveraging its asset to generate return. So means that in this situation, how our asset will be converted to the profit in return. So that's why the higher number is the better, because we use our asset to generate income and profit. So the last one is the return on equity. So what is that? So it shows how well the firm is managing the capital that shareholder have invested in this company. So the higher ROE is the more efficient the firm management generate income and the growth its equity financing. So the higher ROE, the better for the efficient of the firms to generate more income. So that's what the best part of because all the shareholder wants the rewards if they invest in this company.
The next one is NPV and IRR. Our initial investment is RM190,000 with discount rate 10%. Our total present value is 365,121.24. For the explanation, our company's net present value NPV is RM175,121.24, which is good as it is more than zero. This demonstrates that our company's cash inflow outnumber cash outflows. Moreover, investors are continuously on the lookout for companies with a high net present value NPV, and our payback period is 1.32 years. Next is internal rate return IRR. Our IRR is 58%. Our project can be proceed as our internal rate return IRR is quite high, which is 58% and exceeds the cost of capital. The higher the IRR, the better it is, and as long as it exceeds the cost of capital. It also brings a positive value to our net present value NPV.
Okay, we proceed to the scenario analysis. So in this section, we will cover and summarize all the analysis. That's why we only choose the several items that very important and represent to the all analysis. So we choose for the current ratio, quick ratio, inventory turnover, debt to equity, net present value, NPV, and internal rate return or IRR. So this item that we choose is the important that can show all the analysis. and it represents to the all analysis. So for the explanation, so according to the scenario analysis, we will explain and analysis some items from the financial plan that relate to our company problem, which is our company does not have enough capital to grow this business. So we just have only RM 15,000 and need more backup RM 13,000 for our initial capital in order to running this business. So our company have get the solution by get help from the agro bank young agropreneurs in the finance help, but in the future we absolutely have to pay back the debt from the man. So that's why in this scenario analysis we will discuss about it. Plus at the same time we get opportunity to grow up our business and less the risk during our performance in business. So if we look further to the current ratio, we can see from year 1 until year 3, all the ratio were less than 1. So it's such a good performance because in a short-term period, our company can pay back the debt. Moreover, if we look at quick ratio, the value is still the same in the current ratio. Means in the long-term period, we still can pay back for our debt. So it's still our company has the ability to pay back the debt. Besides, the net present value from the year 1 until year 3 show the best value, which means our company got the positive value in the business. Plus, it also gives benefits to the investor to invest in our company in order to get more benefits without worry about the internal rate of return, where it also show the investments rate of return for the investor. Then we also can see the higher IRR, which means our company will get maximum return. So that's what the good condition and good performance of this company. The more desirable to undertake and its profitability of an investment. Okay. Furthermore, as we can see, our company inventory turnover is in a good condition. As a startup company, especially in year 3 with the 4.1 times in year plan, it's such a good performance. It means the higher our company can replace the stock, mean higher profit our company will get. Okay, for the last but not least, we have to discuss in this scenario about debt to equity, which it refer the debt condition of our company. As we can see, the lower ratio below than 1 means that the lower risk of debt in company. Plus, it also will attract the all investor to invest in our company because they based on our debt company makes the decision either our company in a good or bad condition for the debt. So that was for the scenario analysis for our company.